Trade disruption is driving insurance demand, with 2 in 5 businesses expecting related cover to lead as supply chain risks intensify. Here to share his insights is Ramnivas Mundada of GlobalData. Welcome, Ramnivas. So, are traditional business interruption policies keeping pace with non-physical trade losses?
Not fully, because traditional peer still triggers only when there is a physical damage happens. So while if there is any factory damage or any fire happens, then only the claim happens. But as of now, the need of the moment is more about the supply disruptions, tariffs, and global geopolitical issues. So if we consider like one of the global data survey recently polled, so there is more than kind of 23.1 percentage of coverage as of now standalone BI covers versus like non-damage kind of business interruption coverage is around 16.7%, which is comparatively very low. Both the places, the penetration levels are low, but specifically on non-business losses, the requirement is quite high versus what is the penetrated in the market. So to support few of the evidences, like as a part of a recent North America tariff issues, there is certain companies which have filed a kind of insolvencies and they are in critical losses, like SplashGen, Sonic Alert, Stakes Robotics, St. Clair, Organics. These are the companies which are having a heavy losses due to tariffs and other issues which are globally happening. So as such, I believe the current coverage is not comprehensive enough, and it requires high level of customization of policies and business to adopt for a non-business losses.
But the question is, can insurers price geopolitical and supply chain disruption without making cover too expensive?
Yes, but only disciplined kind of underwriting, clear triggers, and modular design can help them to kind of design these policies. As of now, kind of the blanket approach will not work because the losses are not clearly kind of calculated. Require a significant customization because the losses could be anything between tariffs or supply chain disruptions or port delays or anything. So giving one blanket approach may not be survive here. So it is companies has to kind of do a strict discipline during designing their products, and they should be catering to the specific needs of the requirement. So if it is a port delay, that could be a separate requirement. And if there is a kind of tariff related impact, that could be a different. Similarly, supply chain disruption, where one kind of provider having a concentration on a particular market, like currently semiconductors. So that kind of requirement is a different from what we have kind of as a blanket approach. So it is fairly possible, but however, companies need to kind of treat them as a kind of separate needs, and so that they will be kind of reasonable in terms of pricing. Like if we have everything clubbed together, then the pricing may go up significantly and may not help companies to claim their losses in a kind of systematic way.
But which industries would you say currently face the biggest protection gaps from trade disruption?
So as of now, globally, every industry is having impact in a kind of different scale. However, the highest impacted sectors or industries are marine and shipping cargo, which is core business is relating to their shipping of goods, which are impacted significantly because of disruptions in Suez Canal and as well as Hormuz. And other than that, the second important sector is energy, oil and gas, where current Iran is, which is supplying one-fifth of the crude, having a biggest impact. And other than that, the manufacturing sector is another sector which is impacted significantly because it has the dependencies of a components from various parts of the world. And because of this shipping delays or supply chain disruption, they impacted significantly. And other than that, logistic and transport companies and semiconductor industry specifically, where 90% of dependencies is on Taiwan. And we saw in 2021 also, there are significant losses reported by the auto industry. More than 2.1 billion, 210 billion US dollar is the impacted kind of overall industry size in terms of supply chain shortages on chips particularly. So this is one more sector impacted significantly. So all these sectors are some or other way, they are highly impacted.
Thank you for sharing your thoughts, Ramnivas.
Thanks for giving this opportunity.
Once again, that was Ramnivas Mundada, Director of Economic Research and Companies at GlobalData. For more news, visit insuranceasia.com.